Hello all, welcome to Percade Investing. Today we are going to look at the quarter 3 result of TCS. Now if we look at the price movement of TCS, we can see it has made a high of 4043 and a low of 2926, giving us a negative return of 12.51% returns in the last 1 year from October 21 period to the October 22 period. Now, if we look at the same price movement between Nifty 50, Sensex and Nifty IT, we can see Nifty 50 and Sensex has only fallen by 3 to 4%, while in the same period, TCS has fallen by 12.4% and Nifty IT index has fallen double of it by 23.13%. So compared to its peers, Nifty is still in the league and doing better. We can see the same price comparison here, where Infosys has fallen by 13.9% compared to the TCS of 9 to 10%, and Wipro has fallen the most of all with nearly negative of 50%. It is touching negative of 50%. Now, if we look at the revenue, we can see its revenue is increasing quarter by quarter. But what is the growth in the revenue? We can see its revenue was increasing from 4 to 4.4%, but then it dropped to 3%. Now it is again from March 22, its revenue growth is increasing from 3% to 3.83 to 5% in September 22 quarter. Now, if we look at the growth, EBITDA growth is definitely falling every quarter, but this quarter it made a surprise jump of nearly 13% in EBITDA growth. When we look at the PAT was also falling. PAT was also falling, leading the same pattern as that of EBITDA, but in this surprise quarter, it has also given a growth rate of nearly 14%. So we can see EBITDA has grown by 13% and PAT has grown by 14%. So definitely the management is doing something better when their EBITDA has grown by 13%, but their PAT has grown by 14%. That means they were able to reduce something between their taxes, and they have done very good tax planning when it comes to it. If we look at the operating profit margin, we can see the operating profit margin is definitely decreasing every quarter, which is a huge negative for a company like TCS when their margin are constantly falling since the September 21 quarter. Now when it comes to net profit margin, it is following the same pattern and it keeps on falling and falling. This quarter we have seen some growth and it is expected to see the same growth, and it will take next 3 to 4 quarters to be able to come at the power of the same growth level, same margin level. But right now this doesn't look good and it is completely out of hand. But this is not only the case with TCS, it is the same case with every IT company in Indian stock market. Now if we see the result at Snapshot, we can see increasing revenue, and revenue growth is also increasing EBITDA, net profit we can see, but the margin is decreasing. We can see in EBITDA, in revenue, and in net profit. In all three factors, margin is decreasing, which is not a very good sign. Now if we want to look at the fundamentals, we can see its market cap is nearly 11 lakh crore. Enterprise value is more and less the same. ROE is 43%, which is great. ROC, return on capital employed, is also for 54.9%, which is great. And EPS is 107 and the current stock price is 3200. So you can see here, and PE ratio is 29 to 30%. We can say it is ranging between 29 to 30% with the current price tag, and industry PE is also between 27 to 30%. It is little pricier compared to its peers, but people are paying for it because it gives good dividends. In this quarter it has also given a 8 rupees dividend, and which is good. Wipro doesn't give much of dividends, and TCS try to give dividend every quarter. So its PB ratio is also not looking very good, it's like 13%, but this is in the range of the Nifty IT index. Nifty IT index does have PB ratio in this range, and that to equity ratio it is very low, which is a huge plus sign. And fundamentals does look very strong, but we can see the current revenue and growth is a little bit disrupted, but that is due to the macroeconomic factors, you can say. Now, if we look at the shareholding pattern, pledged plus unpledged promoter holding, total promoter holding, if we see, promoter holding is at constant 72%, and mutual fund has decreased their holding in one quarter, but it is again at 3.38%, which is a good sign. Foreign institutional holding has constantly reducing from the high of nearly 16% to the low of nearly 13%. So this doesn't look very good. And if we look at the retail is increasing their shareholding. And if we look at the insurance firms plus other, which makes up the other domestic institutions, we can see they also sold a lot of, but they are still back, they are then again back on track. Here it was 4.8 and here it is 4.9, which actually has been increased. This shareholding pattern is as of 30th June 2022. The shareholding pattern of September 22 quarter is not available as right now, and I've not been able to compute it. If we look at the mutual fund holding, Axis Long Term Equity Fund Growth Direct Plan holds the most of the TCS, the highest holding TCS. And if we compare it to these two funds, we can see these two are digital. This is a digital fund, this is a technology focused fund, so they are obviously going to have TCS as their majority in the portfolio weight, we can see, because they are focused towards it. And TCS is one of the biggest IT company in the India, so definitely, so we can kind of discard them because like they are in the technology fund. But if we look at the other fund, they are like constantly reducing their holding in TCS, and not even by small, very huge margins, 1% they are decreasing their holdings. Like it was, we can say it was at 7%, now it has gone down to 6.6%. But these are actively managed funds, so uh, we can see their holdings has been changing. So this is also not a very good sign for TCS, because their mutual fund holding are decreasing. That means mutual fund managers are not positive about their result, about their returns. So there is another factor to look for it. Next, if we look at the 52-week high 4043 and 52-week low 2926, we can see the price is in the 52-week low range. So it is a good price range to buy if you want to hold it for next 3 to how many 5 years, we can say. But if you want to hold it for only 1 to 2 years and wanna make short term gain, then definitely I think you should skip this stock, because it will need nearly 4 quarters, 1 to 2 years to bounce back. From the 52-week low, it is nearly trading at 22% discount. So if you are looking for 3 to 5 years of investment period or greater than that, then TCS is a very good company. It has very strong fundamental, just because of macroeconomic factors, and the entire Nifty index is falling. So otherwise TCS is a good company. But if you're looking for 1 to 2 years, then I think maybe you should not buy it right now. You should invest your money in something else. But if you're looking for more than 3 years, then definitely go ahead and buy this stock. It is a good stock compared to that. Now, if we look at the price forecast from the analyst, they have given a buy rating for October 23. They have given, I'm not saying it, my analysis is like, let's wait for 1 year if you want to hold it for short term. So the current price is nearly in the range of 3100 to 3200, and if it make negative return in the low range, it will go back to 2572 by October 23. That's what the analysts say. And in the median range, the price will be around 3400. And if it makes a very good, it gives very high growth and it is able to generate good revenue, then it can give an upside of nearly 45%, taking its price to nearly 4600, which is great. And if we look at the fundamental checklist, intrinsic value, current price is definitely more than the intrinsic value, so that is the only negative. Otherwise, we have seen ROE was at 43% and FD return is like 8%, even if we consider it. Still, ROE is like way ahead than FD return. So stock has been generating better returns on equity than bank FD, obviously. Dividend returns, stock does offer good dividend every quarter. Entry point, it is not in overbought zone compared, if we look in from the technical analysis perspective. So you can, it's a good entry point and it's near its 52-week low. So another good thing. No red flag. Management is being pretty good. Default probability, we have seen it's like that, it's like 0.08%. So no chances of default in next 12 months hopefully. Quality check, among the top performers in quality checks, obviously like it's a top performing growth score. As we have seen, the its growth has been falling. So now it has made us some high, some increase in the growth. So there is definitely some space to come back to the previous level. Plus then it can also make growth beyond that. So growth score is also satisfactory. Performance in growth score, it is saying satisfactory, not like good performance. So that is the quarter three results of TCS. And let me know in the comments what next company you want me to cover, and please subscribe to this channel and like the video and comment like what else you want me to cover, and what next company should I work on to.